Hi candidates, welcome to another session of manifested online classes. So in this session, I want us to look on the last subtopic of topic number 4, and the subtopic is discontinued operation. So as far as this topic is concerned, we're going to cover on three main areas as far as discontinued operations are concerned. One, we are going to define what is a discontinued operation. And number two, we look on the criteria for an operation to be classified as a discontinued one, and also the presentation of the results of a discontinued operation. But to start with, I want us to define what is a discontinued operation. And basically we say that this is a component of an entity which has been disposed of, or it is classified as held for sale. So basically what that means is that if an organization, or basically a company, has, for example, closed down one of the branch, or a parent company which had a number of subsidiaries has sold a certain subsidiary, or an organization do own an asset, but that particular asset, or a decision has been made that that particular asset is to be sold, then all those particular items qualify to be classified as discontinued operation. So therefore, we can say a discontinued operation here, a discontinued operation, discontinued operation is a component of an entity, either, or which has either been disposed of, or classified as held for sale, for sale. So it is that particular component of an organization, or component of an entity which is either or which has either been disposed of. Disposing of a component is basically selling off a component. So mean that if an organization, or maybe we have a parent company and this particular parent company own a number of subsidiaries, maybe subsidiary 1, subsidiary 2, and so on. So this parent company may sell off, or may sell that particular subsidiary. So in that case, we say the parent company has disposed of one of its subsidiary, and therefore this qualify to be classified as a discontinued operation. Alternatively, if an organization own a number of assets, an organization or an entity own a number of assets, and one asset has been classified as held for sale, When talk about an asset being classified as held for sale, it means that a decision has been made by the management of the company that this particular asset will no longer be held by the organization for it to be used, but rather the organization intends to sell that particular asset. So therefore, if that is the case, then we say that this particular asset here also qualified to be classified as what? A discontinued operation. That's why we are saying is a component of an entity which either has been disposed of, or it has been classified as what? As held for sale, Now, these particular components which have either been disposed of, or which have either been classified as held for sale, then they should be accounted for in accordance with the IFRS 5. IFRS 5 lays down the rules and also the principles to be used by an organization, to be applied by an organization in terms of accounting for the discontinued operation. So before you look on the accounting aspect of this, so first of all, I want us to look on the criteria which a component, or basically which an operation should meet for it to be classified as held for held for sale. So let's look on the criteria, or basically criteria for classification. Criteria for classification. Classification as a discontinued operation. Discontinued operation. So basically what this means is that for any component of an organization to qualify to be classified as a discontinued operation, it has to meet a number of what? Criteria. So one of the criteria, number one, is that such a component or basically such an operation must, or there must be what referred as a disposal plan. There must be something called a disposal plan. So when talk about a disposal plan, this whereby the management of an organization or even the directors of the company have made a decision that one of the component or maybe one of the asset will be or need to be sold, meaning that once such a decision has been made, then what happens is that that particular asset now will be classified as held for sale. And in topic number one, we looked on how such an asset should be accounted for. Once an asset has been classified as held for sale, what are the accounting implications of such a decision by the management of the company? So therefore, once there is a decision made by the management of the company, the directors of the company, that an asset is to be sold, then automatically it qualifies now to be classified as a discontinued operation. So the other criteria, number two, is that there must be some active effort to sell. There must be some active effort to do what? To sell. So other than the management of the company, other than the directors of the company making a decision that an asset need to be sold or an asset is to be sold, then you're saying that there must be some active effort to sell that particular asset. When we talk about active effort, this whereby, for example, the management is committed in terms of looking for a buyer of that particular asset. Maybe there is an advert in the newspaper, there is an advert in the media, whereby the company has already announced its plan to do what? To sell that asset. If that is the case, then we say that there is an active effort by the management of the company to do what? To sell that asset. Then if that is the case, such an asset should be classified as a discontinued operation. Number three, we say the sale must be completed. Sale must be completed within 1 year. Within 1 year. So basically what that means, that that particular asset, for it to be classified as a discontinued operation, then it must be sold within 1 year. Within 1 year from the date the management of the company made a decision to do what? To sell the asset. To sell what? The asset. So if that is the case, that the management expects that the asset will be sold within 1 year from the date the decision was made, automatically that asset qualified to be classified as a discontinued operation. And also we say that such an operation must have significant impact on the finances and also operations of the company. And also the operations of what? Of the company. So if such an operation will have a significant impact on the finances and also operation of the company, maybe once disposed, still it's qualified to be classified as held for what? For sale. And also on the other hand, we say it must be a separate major line of business, separate major line of what? Of business, or a geographical area, or a geographical area. Basically what this means is that for an operation of an organization to qualify to be classified as a discontinued operation, then we are saying it must be a separate major line of what? Of business, or a geographical area. For instance, or this mostly apply to like a branch, a company having a number of what? Branches, and maybe the company has decided to do what? To sell one of the branches. So because that branch is like a separate line of business, or basically is a separate what, or is basically an operation of the company in a different geographical area, then also it qualified to be classified as a discontinued operation. So therefore, these are the various criteria which are laid down under IFRS 5, which must be met by any component, any operation of the company for it to qualify to be classified as a discontinued what? Operation, as a discontinued operation. Finally, we can look on the disclosure requirements in financial statements, statement. So in this case here, when talk about the disclosure requirement, we are talking of the information which must be disclosed, which must be included in the financial statement of the company as far as a discontinued operation is what is concerned. In this case, we have said a good example of a discontinued operation is whereby, for example, we have a company here. Our company have a number of branches. This company is having a number of branches. Maybe we have, or this company is having a branch, for example, in Kenya, a branch in Kenya, a branch in Uganda, and also a branch in what? In TZ. And maybe because one of the branches has not been performing that well, assuming, for example, the branch in Tanzania has not been doing that well, then a decision has been made to do what? To sell. Or basically not to sell, rather, to close down that particular what? Branch. Once such a decision has been made, then we say that this particular Tanzania branch, then we say it is a discontinued operation. It is a discontinued what? Operation. Now, when the company is preparing financial statements at the end of the year, what the company is expected to do, one, is to determine the profit or the loss which was reported by that particular branch before it was disposed. Before it was what? Disposed. Basically, what that means is that when the company is preparing now, for example, the income statement at the end of the year, the company should not combine the revenue and the expenses of this particular branch which has been closed down with the revenue and expenses of these other what? Branches. Remember here, these particular branches which are still operating, the branch in Kenya and also the branch in Uganda, we can refer to this as continuing operations. Continuing what? Operations. The branch in Uganda which has been closed down because it has been making losses, we refer to that as a discontinued operation. We are saying, according to IFRS 5, when this company is preparing, for example, the statement of profit or loss, then the company should take into account the revenue of the discontinued operation, or in other terms, we say that this company should determine the profit or loss from discontinued operations separately. From continuing operations, first of all, continuing operations. Continuing operations, we are saying these are the branches which are still operating. So the company, for the company to do that, the company now will take the revenue for the branch in for the Kenyan branch plus the revenue of the branch operating in what? In Uganda, and then the company proceed and deduct what? The expenses for the two branches, the Kenyan branch and branch in what? In Uganda, and then the company will do what? Will get now the profit or loss from what? From continuing operations, not discontinued, but rather from continuing operations. From continuing what? Operation. Then the company proceed and determine the profit or loss from the discontinued operation. Which is the discontinued operation? The discontinued operation is this particular branch which has been closed down. So what the company will do, it will determine the profit or loss from that discontinued operation, and therefore you can see, according to IFRS 5, this particular profit or loss from a discontinued operation, we say it must be disclosed in the financial statement as a separate item. As a separate item, the company should not combine the profit or loss from this discontinued operation with the profit or loss from the continuing what? Operations. That's what IFRS 5 do what? do require. So therefore, we can say that the post tax profit or loss, post tax profit or loss. So in this case, when we talk about the post tax profit or loss, we are talking of the profit or loss, the profit or loss after tax, the profit or loss after tax of discontinued operation, discontinued operation, plus, or we can also say, and any gain or loss on disposal, any gain or loss on disposal. So if here we are dealing with, for example, a subsidiary which has been disposed, not a subsidiary which has been closed down, but you're talking of a subsidiary which has been what? Which has been disposed or sold. So once the a parent company, for example, sells a subsidiary, so this particular subsidiary here can be sold at a gain or at a loss, So this particular gain or loss which the parent company get after selling this particular subsidiary, we also say it is an income or an expense from the discontinued what? Operation. So therefore, we are saying that gain or loss on disposal, then we are saying this one must be disclosed in the financial statement, specifically in the statement of profit or loss as a separate what? As a separate item. So the post tax profit or loss from discontinued operation and any gain or loss on what? On disposal. This one should be presented as a single item or as a single amount, not a single item, as a single amount on the face of a statement of comprehensive income, comprehensive income. So in this case, when we talk about the comprehensive income or the statement of comprehensive income, basically we are talking of what? The statement of a profit or what? Or loss. The statement of a profit or loss, which in other terms you also refer to as what? The income what? A statement. So therefore, basically that is very, very important that profit or loss after tax from discontinued operation should not be combined with the profit or loss from continuing what? Operation, but we are saying this profit or loss from discontinued operation and any gain or loss from on disposal should be presented as a single amount on the face of the income statement. If the company closed down one of the branch, then you are saying the company should determine the profit or loss from that particular branch which was closed down and show that as a single amount, or in other terms as a separate item on the face of the income statement. So the company should not, for example, when preparing the income statement, take into account the revenue and expenses of all branches, including the ones which are still continuing. We are saying the information for this discontinued operation, let it be separated. Let it be shown on the as a single item on the face of the income statement, such that once this statement of profit or loss is presented to the shareholders can be able to see the profit or even the loss which was reported by this particular what? Discontinued what? Operation. Then now the extra information or the additional information about that discontinued operation, information about revenue, information about expenses, information about assets and liabilities of such a discontinued operation, then may be disclosed as part of what? As part of the note to the financial what? Statement, as part of the note to the financial statement. So that's basically what you need to know as far as the discontinued operation is concerned. What is a discontinued operation? What are the criteria which must be met for a discontinued operation to be what? To be classified as such, and basically what are the disclosure requirements as far as the discontinued operation is concerned. So I want to give some assignment as far as this is concerned as we wind up. So I have some few questions here which I'll give as an assignment. So what I'll do, I'll just read them. The first question reads, defines a discontinued operation in accordance with IFRS 5. So I repeat, define a discontinued operation in accordance with IFRS 5. Question number two, I read, what criteria are used to classify a component of an entity as a discontinued operation? What criteria are used to classify a component of an entity as a discontinued operation? The other question, number 3, when a discontinued operation is identified, how is it reported in the financial statement? I read again, when a discontinued operation is identified, how is it reported in the financial statement? So we have those 3 questions from this area here. So therefore, make sure you attempt those particular question. Basically, that also brings us now to the end of that topic. So therefore, see you in the next class as we continue with our syllabus.